All right. So I believe we are good to go. I believe we are good to go. So last time when we met, we discussed about pivot points, and we said pivot point two is one of the ways that you can, or one of the indicators that you can also use to analyze the markets, which also helps traders to identify market trend, and also a very key important zone in the market, that is support and resistance. And most traders love using pivot points a lot, and it really works as well. So you can use pivot points in combination with other indicators to also trade. It really helps. So I will encourage you that if you've not considered it, maybe you can also consider it. In as much as you are considering it, mind you, those who joined yesterday's session, I talk about a lot of things that these days I don't want to complicate trading. Hmm? I don't want to complicate trading. I want to make trading so easy for everyone. Trading with system, not just strategy. And I believe that is going to be more helpful. So if we start doing that, there will be peace. There will be less stories of liquidation. And yeah, so I will urge each and every one of you, whilst we are starting this morning session, let's put into practice what we studied in yesterday's session, that is the advanced class, what we discussed. Let us start practicing them, because um trading is an expensive business, and it is important that if you want to be a good trader, not just being a good trader, but you must also remain profitable trader. Personally, it's been long that I experienced the word liquidation. It's been long that I experienced the word liquidation, irrespective of the amount of money that I used to trade. Either $10, $50, $1,000, $9,000, $10,000, $11,000. So liquidation is not my friend. Yes, I know liquidation happens, but personally, it's been long that I experienced liquidation, and I can't just hide it down to let you know that this and this and this are what is capable of. This and this and this are what I'm doing, and of course, well, um, so please, I'm urging each and every one of you that the meetings are important. In as much as you join the meetings, try your possible best enough to do the right thing, practice what you learn here, and I believe it will help you. Right? I believe it will help you. I keep showing you the evidence day and night. I keep showing you the evidence day and night. So there is nothing to waste time about. The most important thing is do the right thing. Just practice what you've been learning all the time, and I believe it will do it. It will help you. There is no magic in trading. There is no magic. If someone tells you that there is magic elsewhere, that he or she is having something so special that is um, that is so intent of bringing you the magic in trading, that is bringing you all the result that you want to get in trading, which will just thicken your sweetness and also turn you into a millionaire. My dear brother or sister, I want to use this opportunity to tell you that there is no magic elsewhere. They will just deceive you and take your money away at the end of the day. Look, they will just deceive you and take your money at the end of the day. It's gonna be a waste of time. And I would always keep telling traders that there is nothing, there is in fact absolutely nothing that can make you so excited than acquiring and then understanding the process of trading and acquiring the skills yourself. That's the reason why we handle this technical analysis class. And this technical analysis class that we've been handling, not only would you use to trade crypto, in all parts of the financial markets, all these technical indicators are legible there. Yeah, they are functioning there, right? Go to forex, you see moving average. Go to commodities, go to the stocks market, you see moving average there. So they should tell you that, look, it's something so expensive that we keep handling down to you day and night, morning, morning, evening. It's something so expensive, and you owe yourself that responsibility to take heed of it and hold it firmly. If you refuse to do so, you are not refusing and you are not hurting anyone, but you are refusing to be responsible for yourself and you are refusing to be responsible for generations. Because I've always been telling myself, what if Brother Emmanuel does not exist? In the world of trading, I believe I might have hurt a lot of people, right? Because God has deposited something good in me for me to share with with the trading industry, with more people, and with RoyalQ community. So if I refuse to be a trader, I have killed a lot of destinies and a lot of souls, right? So please, I'm using this opportunity to urge each and every one of you, to encourage you that do not joke with the training that we've been handling, we've been having morning, evening, every day. Do not joke with them because they hold something so dear by, which can take you to the journey that you want to be. And of course, personally, I see trading to be easy. Don't think trading is too difficult. If you are here, you see trading to be difficult, fine, I understand. But take your time, it will be easy. Don't be too hard on yourself. One day you will remain profitable trader. And I believe having these skills here, your one day is not too far from today. Listen, having these skills here, working with us here today, I'm going to tell you that your one day is not too far from today. Your one day is not too far from today. So tap into that blessing, tap into that anointing, and then let's start the skills together. Do not waste my time at all. Hmm? Yes, I know some of you, you've been attending the meetings every day, and it seems like still nothing is, ah, it's not easy. But then, don't give up. Hmm? It's not easy, but then don't give up. Let's all try. Because personally, I ask myself, whatever I make in trading, no one can pay me off that money outside there. So why should I even consider alternatives? Do you get it? So guys, let's help ourselves. All right. So from what we discussed last week, that is 3 days ago, about the pivot points, I believe that it's very very important, and we're going to practice that. So this morning I decided not to go too far, but then still address one or two things from what we discussed previously about the Bollinger Band, then also add one indicator in addition, that is the stochastic RSI, which is very very important, so that we conclude all the session on technical indicators for this week. If God permits, if there is an opportunity, we'll do so. If there is no opportunity next week, another leader will take over. After that, I'll get back again and for us to continue the following week, right? So we keep handling the session to December. So December we'll end the session. Then if God permits, leaders will come and will put things in order. January we will bring a new timetable. We will reschedule all our lessons and our lesson plans to ensure that it can be very very effective, because I've been receiving a lot of reports as well, and we may be taking all those reports into consideration. So we may bring more review and also ensure that all our sessions, our signals and everything this time around will be of more updated and valuable as compared to whatever we are doing now. So anticipate for better um information, and then also better things if God permits. 2025, 2026. Let's proceed. Okay, so let's look at the Bollinger Band, and then RSI again. Now this time around, not just considering Bollinger Band. Since you have fair idea about the Bollinger Band, we are going to use this opportunity, how to use the Bollinger Band and then also the RSI to make entries in the market. How to use the Bollinger Band and then the RSI to do what? To make perfect entries in the market. Then after that, we will also look at the stochastic RSI, how we can also use, I'll talk about the stochastic RSI. No matter how we spend time here, so I'm going to use 30 minutes for the Bollinger Band perfect entries on RSI, and then also stochastic RSI to 30 to 15 to 25 minutes to do that. Then we bring the session to an end. So now we've all got fair idea about the Bollinger Band, and I believe Bollinger Band is one of the best indicators. Together with MACD, RSI, and others, moving averages, they are all good. And whatever we've stated, you can practice them, right? So, talking about the Bollinger Band, we said the Bollinger Band is what is a volatility indicator. It's a volatility what indicator, and RSI too is a momentum indicator. So basically, what helps trading to be so easy, and then also gives build more confidence when it comes to trading and making entries, is when different types of indicators align together, and then also helps traders to build their confidence in the what's in the markets. So considering the Bollinger Band and then also RSI, you may consider the time frames, which is the 5 minute time frame, 15-minute time frame, and then also 1 hour time frame, right? Or better still, our old formula, you can consider the 15 minutes, 1 hour, so the 4 hours. But this time around, I encourage more of 15 minutes, 5 minutes, 15 minutes, and then 1 hour time frame. So that is what we are going to base on to make most of the decisions when it comes to using the Bollinger Band and RSI. So now, how do we start? How do you use? It's very brief and precise. So now, I've already explained, or in our previous lessons, we've discussed about the fact that the Bollinger Bands are having three lines, okay, which is the upper band, the middle band, and then also the lower band, where the aside the middle band, the two bands are that is two standard or deviation from each other from the middle band. Then also, so when you talk of using the Bollinger Band to make entries in the market, first we discuss about the fact that when price, and basically when we talk of price, we mean the candles, right? So when the price touches or closes below, when the price touches, okay, or closes below the lower band, right? When the price touches or closes below the band, now you realize that we said when the price touches or closes below the band, you realize that the price will go down, right? The prices are going down. So automatically, when the prices are going down, the next thing that we said was if it's either there will be a breakout, or the price, after the price touches the lower band, the next thing that we will anticipate is there will be an uptrend direction from that area or that zone, right? So in our discussion here, what you're going to do is this: if it happens that the price touches the lower band, let me draw the band itself here. In as much as we will go to the charts, so these are the bands. So then also let's assume, so these are the candles, right? Oh so let's assume these are the candles. Okay, good. Now this is the price we are talking about. So we said when it touches the lower band, okay, it may either touch or it may not always touch. So what we are saying is when it closes below, when it's either it touches or closes below the lower Bollinger Band, right? You also realize that RSI is at the oversold zone. So if I want to make entries in the market, if I realize that the prices, or the last price of the asset of the candle, or the last price touches below or get closer to the lower band, and then RSI 2 is at the oversold zone, which is either 30, 20, 10. This simply means RSI is at the oversold zone. Now, when this happens, the next thing that traders consider is you may realize that the price may do it reverse. Mostly, as for the Bollinger Band, unlike the other indicators, mostly if you have studied enough, you realize that anytime price touches below the band, the next thing you could see is price reversal. I don't know if you've ever you studied that. So our point of entry is simple. If we want to go on long, we just take our time to realize how fast the price may touch the lower band, especially when there is breakout. If there is breakout, it gives you even more confidence, because after the breakout, the price may reverse back, right? Buyers may begin to join the journey. So what may give you more confidence is after price touches the lower band, because mostly it's not easy for the price to touch the lower band. So when it touches or break below, or when it gets closer to the lower band, and you realize that RSI 2 is at the oversold zone, which is 30, 20, 10 and below. This may signal more confidence in the market. And as a result of that, it may give you the indication for you to go on long or buy the assets. Now, if you buy the assets, there are two ways of considering your take profit. When I say buy, we mean long, right? When I say buy, we mean long. There are two ways of considering your take profit. After the price touches this band, okay? After the price touches this band, the next thing you could see is there could be the price trying to rise back, right? There could be price trying to do what? Rise back. So over here, what you will do in terms of take profit is you can consider TP1, TP1, TP2. That is your first take profit 1, take profit 2. In that case, you can do what? You can wait for if the price touches below, it simply means the price would have to come back further. So you can wait for the price to do what? To get closer, or for the price to hit the 20 simple moving average, which is the middle band. When the price hits here, you can let your target be around. Mind you, we said the Bollinger Band is also serves as for support and resistance. Do you remember? Do you remember we said the fact that we talk about the fact that the Bollinger Band is also the Bollinger Band also serves as for support and resistance. So you can consider your take profit to be at this zone, right? And then also you can also consider your second take profit, right? Your second take profit to also be at the upper band, which is serving as your second resistance level. So if the price is able to hit the upper band, you won. Notwithstanding, do not be too greedy. So you can consider to take profit allocation. First, you measure here. You take your measuring tool, you measure up to this point. You go for your 1%, 5, 2%, 3%, whatever percentage you want to go for. The next one is up to here. So if the price is able to touch, you make your profit, you are good to go. So TP1, TP2 may yield good results. That is when the price break above the 20 simple moving average, or when it touches above, or when it touches the middle band. Now, RSI at 30, we all know it at the oversold zone, and this is not the time for you to sell, but instead this is the time for you to do it, for you to buy. So in most cases too, as the price goes above this zone, and you realize that RSI is also rising from 30, now it has risen from 30 through 60. In fact, this may give you more confidence that now you've enjoyed the market with good profits. If you're able to buy assets at an RSI zone, which is around 30, and now it's beginning to reverse back to 40, 50, 60. By the time it gets to 70, my dear, you don't have to stay in the market. You have to get out of the market. I don't know if it's clear. So using RSI to go on, using RSI in the Bollinger Band to go on long will be very sure though, and you make your profit. Let me know if it's clear. Is that clear? Is that clear? Let me know if it's clear. Is that clear? Hmm? Is that clear? Let me know if it's clear. Is that clear? All right. Very good. Very good. So you see, it's very simple, right? It's very, very what? Very, very simple. So you use Bollinger Band together with what? With RSI. You use Bollinger Band together with RSI. So someone saying, please, can you repeat? Right? So since Bollinger Band is a volatility indicator, now the next thing is, okay, um, RSI. I mean RSI, not stochastic RSI. RSI. We're talking about RSI here. Hmm? Okay. Now, pay attention. Fina said you don't know. When Fina said you don't understand, Fina, pay attention to this. So, um, oh, okay. So now what we are saying is very simple here. The Bollinger Band is a volatility indicator. RSI is a momentum indicator. So we are combining RSI and then Bollinger Band to make entries in the market. Now we got an opportunity. Bollinger Band with its three lines here. Bollinger Band. So let's assume this is the middle band MB. This is the lower band, and then also this is the upper band. All right. Now price from this origin it gets here. So all right, let's assume something roughly like this, even though this is not how price behave. Right. Now the price touches below this band, below the band, or it closes below, or there was even a breakout, right? Now, when it comes to Bollinger Band, what makes it so interesting, especially when there is a breakout? After every breakout, mostly you see that buyers begin to enter into the market. After every breakout, buyers begin to penetrate into they enter into the market to take decision. Right? Now, we said when RSI is also at the oversold zone, which is oversold simply means RSI is around 30, 20, 10 and below. Right? So during this zone, the possibility that there will be a price reversal is very high as compared to price continuation, right? The possibility that there is going to be price reversal because at the Bollinger Band, the price has successfully been sold. Now it's on the what? It's on the lower band, which simply means after here, it's going to take another strike from this zone to this zone, right? So what we are saying is, if this happens, I take my measuring tool, I measure here, then I consider my take profit on the middle band. That is my first take profit. Then the second take profit should be on the what? On the upper band. Now, RSI could also rise from 30 to 60, 50, 60, 70. At this zone, this should tell you that now this should be your exit point. Your exit point should be around this zone. Since RSI has gotten here and the price too keeps rising towards the middle band, then you've made good profits, right? So we said at the end of the day, you may use the Bollinger Band and the RSI to make entries based on these simple rules that RSI is below 30, and then also Bollinger Band is also the price as close or touches below the lower band. That's all what we are saying. Fina, hope it's clear. Fina, is it clear? Fina, is it clear? respond for me to proceed. Finn, I hope it's clear. All right. All right. Okay. So now the inverse of it is why is this thing? Okay, good. So the inverse of this of the buying is what is the selling. So let's look at the selling opportunity too. Let's look at the selling opportunity. Now, when you look at the Bollinger Band, we said it's either, since the Bollinger Band serves as support and resistance, it's either price are below the lower band or they are above the upper band, right? So this is the upper band itself. So looking at the upper band, these are the prices. These are the price moves, upper band, which indicates what? Good. These are the price moves on the upper band. Good. Hope you can see this. These are the prices move, right? So what we are saying is this: when it comes to sell or short, now in simple terms, this is how we go about it. So since the price touches this area, you can see this place was a breakout. And after the breakout, sellers will begin to push the price down. You can see till this end, right? Sellers will begin to do what? Push the price down. And since sellers are determined to push the price down, RSI too, at that point in time, RSI may be at the zone of what? Of 70 or even 80 or 90 zone. Now, all these three zones indicate that when the price is at 70, 80, 90, it indicates what? When RSI is around 70, 80, 90, what does it mean? When RSI, write your answer in the chat box. When RSI is above 70, 80, 90, what does it mean? What does it mean? Drop your answer in the chat. Drop your answer in the chat. Drop your answer in the chat. Let me see if we are here together. When RSI is above 70, 80, what does it mean? Very good. Very good. Which people are saying oversold? Which people are saying oversold? No, that is not where we determine. We are talking about sell. Short signals here. We're talking about shorten, right? You're talking about shorten the signals. And what we are saying is this. Good, it's true, it's at the overbought zone. This is the next thing. What we are saying is this. The price is at the it's at this zone that is touching the upper band. And since price touches the upper band, the next you could see is buyers are now trying to push the price down, right? Since buyers are now trying to push the price down, what the trader should consider is to short the asset or sell, right? So what we are saying is, with the RSI condition too, the RSI may be at the 70, 80, 90 zone, which simply means the price is overbought. And after every overbought, the next thing that you see is sellers pushing or dominating the market. So if sellers are dominating the market, what should you do? You should short. If you long, because RSI is 70, 80, 90, you may end up experiencing pullback, which the market will go against you. Now we are talking about Bollinger Band RSI, not other working conditions. Pay attention. We are talking about the rules of what? RSI and the Bollinger Band, not other working conditions. So if you find it so interesting to use, then you must stick to the plan. You must stick to the strategy here, right? So over here, if I want short signal, it's so easy to consider short signal because you may be able to realize that RSI getting to the 70, 80, 90 zone, that is a pullback or overbought, sorry, at the overbought zone. And since it's at the overbought zone, now sellers will begin to do what? Penetrate into the market, or they'll begin to push the price down. And since sellers decide to push the price down, the next thing that you have to do is to do what? Is to short the assets. Why? Because looking at the volatility of the markets, now the price now touches the what? Touches the upper Bollinger Band, and now it's being resisted, right? It's being what? Resisted. That is the reason we said the Bollinger Band serves as a support and resistance. So when the price gets resisted here, the price will be pushed down, right? Immediately the price got resisted, to be pushed down, it will no longer be there. Do you get it? I don't know if you get what I'm saying. Do you get it? Do you get it? I don't know if you get what I'm saying. Do you get it? Let me know if it's clear. Do you get it? Is it clear? Fidelis is saying please repeat. Fidelis is saying please repeat. Mm. This is very clear here. Now, price just got here. Mm? Oh, that thing is not even appearing again. Eh? Price just got here, and since price got resisted on the hot on the price gets over here, this we said the upper band serves as a support, sorry, resistance. The lower band serves as support. And when price touches the support, automatically there will be a bounce. So we've forgotten we studied about the Bollinger Bands, the squeeze. That is the volatility indicator, which is in Bollinger Band, right? So when price gets to the upper band, it gets resisted. Now let's go to the chart. Maybe the chart will explain things better. When price gets here, anytime price gets here, either it breaks above or it will get here and get rejected. So when price gets rejected, when we say it has gotten rejected, it simply means that it couldn't move further and it's getting down. The price keeps going down again. Hmm? That is the meaning of it got what? It got rejected. Let's go to the chart on trading view. Let's go to the chart on trading view. So trading view, good, good. So let me close this. Okay. So over here, since we have our chart here, now, good. So we have the chart here. So just come here, click on these three dots. Click on this what? These three dots. After clicking on the three dots, let's see. Tap on this indicator. You see So I guess I'm back here. Am I back here? Am I back here? All right, thank you. Okay, I guess the network took me out. Hope I'm back here. Can you hear me? All right, okay. Okay, then I believe we can proceed. Yeah, let's proceed quickly. Okay. So now let's proceed. Hope it doesn't happen again. Okay. So okay, good. So let's add, we add the, no, let me close this. Let me close this one as well. Okay, good. So we said you just click on the three dots. After clicking on the three dots, click on the indicators. After clicking on indicators, search for what? Bollinger Band. Good. So this is Bollinger Band. Good. So tap on it nicely. Then search for RSI. RSI. Good. Tap on it nicely. Let's go to the chart. So we have the Bollinger Bands here, right? We have the what? The Bollinger Bands. Now, there are some instances, okay? So looking at the present band, this is what you could see, okay? That the price, they are just below the lower band. This is a typical example. The price are below the lower band. And since price are below the lower band, you could also see that this is RSI. And RSI is what is around what 38.31. Now, in this instance, what we are saying is that when RSI get to the oversold zone, around let's say 30, 20, 10, these areas or these zones are confidential zones to tell the trader that the price is below entry zone, and this is the best zone to make entries because the price is down and buyers may soon do what? Penetrate or enter into the market. And if you've stated enough, let's look at it. Anytime the price touches or gets closer to the lower band, you could see that buyers begin to take it up. Just look at the various trends here. Just look at the various trends. If you take your time to look at the various trends that happened, you could clearly understand what I'm talking about. Look at it. Look at this zone, right? Look at the various zones where the candles closed, the last price closed at the lower band, and you could clearly understand what I'm talking about. Do you get it? Look at this zone, and you could clearly understand the language of communication. You could clearly understand the language of what? Of communication here. So you can see, then it took it from to that end, right? And you can see from this end, buyers also hold on the baton. So that is how it works. That is how it works. So understanding the use of the Bollinger Band is very simple. It's very what? It's very what? Very, very simple. Please, is that clear? There are some instances too you can't just consider to make entries. Me, for instance, assets like this, there are some instances you can't just consider to make entries without looking at other indicators like MACD in addition. Without looking at other indicators like MACD in addition. But what we are saying is, but in most cases, as we are saying, you could realize that it's happened, right? It's happened very clear, and it's reasonable here. Where is my uh, me see. I don't know if you get it. Let me know if it's clear. Let me know if it's clear. Let me know if it's clear. Very good. Very good. So that is all what we are saying. That is all what we are saying. Now, the next thing is the selling zone. If you consider the Bollinger Band, you could realize that in most cases, let me see if we could get a good trend like that. So you can see over here, it's even difficult for you to get a resistance breakout or a price to break out on the resistance. Only few instances. So let's use this candle. So this is where the price got rejected, and after the rejection, buyers penetrated, buyers took over, right? So after this zone, what we are saying is after this zone, after the price gets rejected here, if it happens that the RSI is also giving you, its RSI is around 70, 80 zone, that should tell you that after this zone, sellers will take over, right? Sellers will do what? Will take over. And of course, if you can critically see, after this particular candle, sellers took over the price, right? So that is the exact thing we are communicating about here, and it really works as well. So considering the price, how the prices rotate within the bands, after the price touches every on the resistance, which is the upper band, the next thing you could clearly see, when the RSI is given at 70-60 zone, you could clearly see that the price got rejected, and at this point in time, now sellers will begin to do what? Dominate or take over the price. So quickly, that is it. Now let's talk about the stochastic RSI. The stochastic or RSI. I want to talk of the stochastic RSI. The stochastic RSI is measures, is used to do what? Measure how fast RSI itself keeps changing in the market. But before I move on to stochastic RSI, let me know if you've understood our points of communication. Let me know if you've understood our points of communication. Let me know. So it's clear, but please, I'm new to the usage of TradingView, and it appears like most of these indicators are paid futures. No, they are not paid futures. They are not paid futures, my dear. They are not paid futures at all. Okay, since it's clear, then I believe we can quickly move without wasting my time. All right, let's proceed. Okay, so now we talk about stochastic RSI. Quickly, let's move on. So let me remove all these indicators. Let me remove them. Now, let's see stochastic RSI. So we can still go back again and then add. So good. So we have stochastic, okay? Then also stochastic what? RSI. So we are going to use the stochastic RSI. Good. Now, basically, the main work of stochastic RSI is to filter RSI. Is to filter the work of what? RSI. So that is the reason why most traders prefer to use stochastic RSI as compared to RSI itself, because stochastic RSI filters RSI. I don't know if you get it. When I say it filters RSI, you see RSI is used to measure the relative momentum or the relative strength of what of an asset or a commodity, right? But the work of stochastic RSI is to measure how fast RSI itself keeps changing. So if the price is changing within a particular momentum, let's say 60, 20, 80. Now, the work of the stochastic is to measure how fast this price keeps moving or how fast this price keeps changing over time. So if I want to know the fast movement of RSI, then I prefer to use what? Stochastic. Right? So RSI is used to measure the momentum, right? And then also the stochastic RSI is used to measure the momentum of the RSI itself. So in as much as RSI is used to measure market momentum, the stochastic RSI is used to measure the momentum of the RSI. I don't know if the message is so. Do you get it? Do you get it? Do you get it? Do you get it? Hmm? Do you get it? Oh, very good. Very good. Very good. Now we can proceed and jump into our session. Right. Good. So back to trading view. I'm not going to complicate anything here. Let's go to the chart straight away. Back to trading view, you could see that we have two lines. We have the red line and then also the blue line. The red line and then there was the blue line here. All right. So instead of RSI, instead of we looking at RSI directly, right? The stochastic, looking at the stochastic RSI, it will be able to tell us that RSI values whether RSI is moving at a very fast pace or a low pace. Either RSI is high or RSI is what is low. Do you get it? So in our case, when we consider the stochastic RSI, it's either it's having a value of 0 to 1, right? Or 0 to 100. They are the same. So stochastic RSI may be given a measurement from 0 to 1 or 0 to 100. So this time around, it seems we have here 0 to 100. That is what we've got here. This is it from 0 towards 200. And I believe you can see that from 0 towards 200. I believe you can see that. Can you see that? Can you see that? Very good. Very good. Very good. All right. Good. So now let's look at the crossovers, how the crossover happens, then also the values here. This is very simple. As for stochastic RSI, it's very simple to use as compared to uh, the main RSI itself, right? So when you look at the crossovers here, or when you look at the RSI cross, let me extend it. Good, good, good. So we have the blue line and then also the red line, right? So when the red line or when the blue line crosses above the red line, right? When the blue line crosses above the red line, it indicates that it is what? It is upward or uptrend. And when the blue line crosses below, it indicates that it is what? It is downtrend, just like other indicators, how we've been interpreting them. So look at the crossovers. Mm, mm, very firm. Okay. Look at the crossovers here. There was a crossover. We look at this point. Look at this point. Look at this point. You consider even here, 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 right? You could clearly see various crossovers happening. And what we are saying is this: if this blue line, when it's above this, that is uptrend or upward momentum, an upward momentum. And when the blue line is below a downward what? A downward momentum. So it filters the main work of what? RSI, right? It filters the main work of what? Of RSI. So though, if we want to spy to consider how strong the momentum may be, if you want to spy to consider how strong the momentum may be, that is when the value of RSI is in line with the crossover. So you could see presently the value of RSI is what? Is 36, right? It's 36. The length of RSI itself is what? Is 36. Yet there is a crossover indicating what? An uptrend, which simply means the momentum is weak. Which simply means the momentum is what? Is weak. Why is it an uptrend and yet the momentum is weak? Because you could clearly see here that in as much as buyers try to appear here, it's weak. Do you get it? In as much as buyers try to appear here, it's still weak. Buyers are still weak in dominating the market here, right? So you could clearly see that even though RSI is 30, the price or the crossover happening here indicate that it is up, yet it is having a weak momentum. So using the stochastic RSI, it filters the price, gives you two things: the trend, and at the same time also the momentum. I don't know if you get it. 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 Let me see. Is there any question? Okay. Okay. Very good. Very good. Which is very clear, right? Which is what's very, very clear here. So if we understand this, you could easily use the stochastic RSI in combination with other indicators, because the work of the stochastic RSI is to do what? Is to filter the entire price, gives you the trend and then also the momentum. So if the trend is different and then also the momentum is weak, that is when you could clearly understand that it is what? It is a fake trend, right? So if I'm using stochastic RSI, considering this, let's look at other indicators. So let's add maybe um, moving average, or let's add moving average cross. Okay. Now, when you look at the moving average cross, this is purely a downtrend. This is what? A pure what? Downtrend. Look at the RSI. That is, it is around what? 30, which is 30. And the 30 simply means is that what? Oversold or the selling zone, right? And look at the trend here. That is changing, telling you that it is upward movement, upward trend. So what we are saying is that unless otherwise, you could clearly see that even though buyers are here, but it is having what? Their momentum is weak. Buyers appears to be here, but their momentum is what? Is weak. That is what we are saying. And this is what can tell you that it may be a false, based on the decision on what? On stochastic RSI. It may be what? A false buying. It is false. it is not true trend, right? But it is false, appearing that it is uptrend. So when the stochastic RSI or the RSI indicate that it is 38, that is selling zone, and also uptrend, then it simply means you have to do what you have to wait, because over here even the moving average has indicated, confirmed to you that it is what, it is downtrend. So that is where you either have to wait, or you need to know that this is a false trend, or you either have to wait for confirmation, a better confirmation to happen. That is all of what we are talking about, or we are saying with regards to what? With regards to um, RSI, stochastic RSI. So over here, when the price goes above 80, just like the moving the RSI itself, when the price is above 80, that is overbought. When it's 100, overbought. So from 60 and above, it simply means that is buying zone. When the price is at 60 and above, price is at buying zone. When it's below 30, that is oversold, right? 80 beyond is overbought, 30 below is what is oversold. And this could clearly be seen when the crossovers happen, right? So you have the stochastic RSI, which may filter the prices for you immediately to know your left and your right. Is this difficult to use? Is this difficult to use? Let me know. Is this difficult to use? Is this difficult? Is this difficult? Is this difficult? Hmm? Good. Good. So that is very clear. So I believe that we can add this idea to other indicators, right? So that's the reason why a lot of people prefer to use stochastic RSI compared to RSI itself, right? So what's happening? Can see someone saying it's like a film. I don't get it. So, oh, what's happening? Please, which part of it that you don't get that is looking like a film? Eh? Which part of it that you don't get it? Okay, so this is overbought. Now let's get it. Let's get back here. The values here. Oh, okay. Where is this? Do you like how this thing keeps vanishing? Let me unshare. Let me unshare and reshare again. Okay, so we quickly do that. Okay, what am I doing here? What is the zoom itself? Am I in the zoom or I'm out? All right, let's proceed. Let's proceed. So what we are saying is this. Looking at the values here, okay, we have 30, which is oversold. Below 30 is oversold. Above 70 is what is overbought. So if you want to consider oversold and overbought assets, I guess I need a pointer. That's the reason why I came here. So let me quickly do that. All right. Good. So look at this. This is 30, which is over what? Oversold. Now you can see the line here. Look at it. It's already there, right? So here is 100, which is overbought. From 70 to 100 is overbought. From 30 to 0 is what is oversold. So you could clearly see that though there is a cross here, but then it is still at 36 zone, which is selling zone. Selling zone, which is what selling zone. And of course, the crossover, looking at the moving average cross, it is still a downtrend. So that is the reason why we are saying that the stochastic RSI filters the price. It do what? It filters the price. So this will tell you that this is a false trend. So because the RSI is 36, which is indicating that it is what. What happened? What happened? All right, let's proceed. Let's proceed. Is my screen visible? Hmm? Can you see my screen now? Uh, Not yet. Uh, okay. All right. Is it visible now? Is it visible now? All right. Very good. Very good. Okay. Good. Then let's proceed. Okay. So um. Oh, okay. Okay. So now what we are saying in summary is this. What we are saying in summary, the stochastic RSI is used to measure how fast RSI itself changes. And we all know RSI is used to measure the momentum of price or of a market of an asset, right? Now, the stochastic RSI is used to measure the momentum of the RSI. So looking at RSI, instead of looking at the price directly on RSI, stochastic RSI would rather look at RSI values and tell you whether RSI is high, low, or relative to its own recent history. So you look at the present price of the asset or the recent price of the asset. It may give you the recent history of the auto price, which simply means RSI itself is good, but stochastic RSI is far better because it filters the exact work of RSI. Right now, the crossovers or the cross up and the cross down helps traders to identify either a price is bullish or bearish. Either a price is bullish. Am I in the Zoom? Am I here? I'm out. Am I out or am I? All right. Good. 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 So traders may be able to indicate two things: either price is above or below using the stochastic RSI crossovers, where we said the blue line cross above the red line, it indicates price is uptrend. When it crosses below, it indicates price is downtrend. Right. Right. Hope that is clear. Hope that is very clear. So the next thing is that using the RSI, you could clearly see, we said when the price is below 30, that is oversold. When it's above 70, that is overbought. And this move, it works hand in hand. So anytime I observe the charts, I could clearly see how the stochastic RSI filters the price to give me both the trend and then also the momentum together. Is this difficult? Is this difficulty? If it's difficult, let me know. Let me bring the session to an end. We have the Q&A session by the next 1 hour. By the next, that is 58 minutes time, we have our next session. So let me know if this session is clear, if you've understood, so that we can end the session here. Let me get back to the Zoom. So let me know if it's clear. Is it clear? Not at all. Someone say not at all. Not at all. I'm still learning. I never understand. So which part of it that you don't get it so that I can clarify? Okay, so yes, we can hear you. Okay. All right. Okay, so saying it's clear. It's clear. All right, very clear. All right, so I don't know. So I'm still learning. I never understand. Please, which part of it that you don't get it so that I can clarify it for you? Which part of it that you don't get it so that I can clarify it for you? All right, please, not clear. So which parts? Which parts? We've learned a lot here. Which parts? Is it the oversold that you don't understand? The overbought? Is it the crossover that you don't understand? Or which? So Clinton, which part of it that you don't get it? Let me know. Eh? Which part of the session that you don't get it? Is it the overbought that you don't get it? The oversold? Or which one? So let me know. Now, this is the stochastic RSI. I don't know if the stochastic RSI is what you don't understand, that it's stochastic RSI, or the crossovers that you don't understand, or what. This is stochastic RSI. We said we have the value from 0 to 100, right? 0 to 100. So maybe you want to see the 100 too before you believe. So from 0 to what? Good. So from 0 to 100, don't worry. Let me straighten it for you. Good. Now, this is 100, okay? From 0 to 100 within this zone. When the price is 70 and above, up to 100, we said it is what? Overbought. When it is below 30, We said it is oversold. Good. Now looking at the crossovers, we said we have two lines here. We have two lines. These lines help filters the real work of what of RSI because it is called the stochastic RSI. The stochastic RSI. So look at this. We said when the crossover happens, we have the red and then the blue line. We have the red line and then the blue line. This is where crossover happened. And the blue line is below the red line, which indicates downward momentum. Because the main work of stochastic RSI is to identify the trend and the momentum at the same time. Right? So you look at this, you understand. There is also a crossover here. So let me good. Now, this is it. I intentionally brought it here so that you can see. You could clearly see that this is where the crossover happened, and it is around 12 and 14 zone, right? 12 and 14 zone. So wherever there is a crossover, it's either it is down or up. So if the blue line is below the red line, it is downtrend. If it is above, uptrend. But then what we are saying is because the stochastic RSI filters the main work of or filters the momentum when the crossover happens and it is also strong as you can see here, then you could say that okay, then it is having strong momentum for buyers. But this time around it says it is up and yet you can see that the momentum is weak, which indicate that it has to filter it, which is indicating that it is weak, right? So that is where traders must do what must wait enough for confirmation so that they can see that the trend, both the crossovers and then also the value aligns with each other before you can do what you can make entries. This is simple as ABC. Let me know if it's clear, Clinton. Is it clear now? Clinton, is it clear? Is it clear? It said the oversold and overbought. Now, when we talk of oversold, there are more sellers. When we talk of overbought, there are more buyers. Is that clear now? When we talk of oversold, there are more sellers. Overbought, there are more buyers. It's clear, right? Okay. Hope it's clear. When we talk of oversold, we mean more sellers. When we talk of overbought, more buyers. That is what we are trying to mean, right? Very good. Okay, so guys, I believe we'll end here for this morning. We still have another session that will take place. That is the Q&A session led by different leaders who would be here to present, to assist us in answering the various questions that we don't understand. Let's keep encouraging ourselves. If you think maybe the lessons are too difficult, well, I don't know. But I've been advised by various leaders that those who prefer to go for one-on-one session, we should not prevent them. I'd be like, okay, no problem. So that is an opportunity for you. But then it depends. You should understand that one-on-one session may not be free. And you should also be willing to go by the TNCs that would go with it. So guys, we would end here this morning. Go to our YouTube channel. Practice what we've stated. Yes, go to our YouTube channel. That is Ryoki Revolution. Ryoki Revolution. So go to YouTube and get the videos there to learn, right? Good. So if you don't understand anything, always the platform is there. You have our Revolution platform, which can also assist you. Leaders and other followers are there to have training discussions, which is also engaging. Well, so you may choose to join as well. All right. So let's end here for this morning. See you in the next session, if God permits. I wish you all the best and have a good day. All right. Bye.